Hi everybody and welcome to Ecophysiotherapy Presents Health, Wellness, and Lifestyle. My name is Madeline Golick and I'm a pelvic health physiotherapist and the owner of Ecophysiotherapy. And I have a super awesome guest with me today, Jack Cekovic with Royal LePage. He's a real estate agent. Welcome to the show.
Thank you kindly for having me over.
Yeah, I'm excited to have this conversation. So today we're going to be talking about the upcoming stress test. And no, I don't mean, the stress test you do when you go get your heart checked. This is more of like a financial stress test. But before we get into that, I just wanted to remind you that this video is a pre-recorded video. So we will be able to answer your questions via chat. And then, of course, at the end of the video, we will provide contact details in case you have more questions for the both of us. All right, so I thought before we get into the whole stress test thing, I thought maybe you might tell us a little bit about you.
So, real estate?
Yep.
But before real estate, father, husband, and hopefully a good friend as well. Been in real estate for a few years now, 3 years. Transitioned from a company where that was very, very service-oriented. So for about 12 years, felt like I really acquired skills that would transition into real estate really well. Wanted to build something my own. Wanted to make my own mark versus working for somebody else, and that drove me into this business. I like to be around people, and I like to be the connector. And in real estate, you definitely get the opportunity to do that, to connect people.
Absolutely, yeah. I can imagine you must need to know a lot of different people when it comes to buying and selling homes, and even outside of just that. So that's awesome. Okay, so we're talking about the stress test today, and I'm going to be honest, I have no idea what that is, and I'm sure our viewers have absolutely no idea what that is. But the reason I thought it was important for us to talk about it is because when you think about your home, it's a part of your lifestyle. You go home, you have a family, it's shelter, and it's secure, and it's your sense of security, right? But it's also really tied into financial security, and when those can be iffy, that can create a lot of stress in somebody's life. So I wanted to kind of find out from you, is this stress test coming up in January? Is this just for first-time buyers? Is it for refinance? Is it for anybody who owns property, including investments? So what is this stress test about?
So homes are pretty important. It's shelter, freedom, food, and shelter.
Absolutely.
Necessities, things that we absolutely have to have. Stress test coming in is going to be encompassing all residential financing. So barring commercial mortgages on large commercial properties, it will affect people. It will affect financing from prime lenders. So the stress test is coming from the OFSI, which is Office of the Superintendent for Financial Institutions. That is a governing body for prime lenders, for the big banks.
Okay.
And they are definitely regulated by that stress test, that legislation. That being said, a lot of secondary lenders will follow suit as well and follow those rules.
So what is the purpose of this stress test? Why are we having one?
We're starting. We had for now a while, since 2008, 2009, historically low mortgage rates, and rates are starting to creep up, starting to go back up a little bit. People get very, very overextended to obtain their home, either first home or their dream home, and there's a sense of danger from lending aspect or from government that if the rates continue going up, some folks simply won't be able to stay in the homes they own, because maybe their mortgage will come up, and rates being higher than originally they obtained the home, they will not be able to refinance. They will not possibly be able to keep up with the trend of the mortgage payments. That being said, that and the housing market, the appreciation rates we've seen over the last couple of years where they were touching 20-30% annually are completely unsustainable. That has been happening in some areas, Toronto area, Vancouver area, and they wanna tame that down as well, because it is not sustainable. It is not, for lack of better word, natural or organic. And this is another initiative to slow down the housing market. So it's leading in that direction. And with some of the legislations in Ontario that we have seen, starting in April with the Ontario Housing Plan, and raising the interest rates by Bank of Canada, and now the stress test on a federal level. Those are all some of the things the government is implementing in order to tame the housing market. Whether it's right or not, I think that conversation is at this point irrelevant, because it's coming, it's happening, and it's really important for people to be aware of what's going on, how it can impact them, and how to go about it.
Yeah. So what I think might be useful is, let's maybe focus in on folks that maybe just recently bought a home in the last 1 to 3 years. How might it affect this particular group?
So, if they need to refinance past January 1st, depends how recently they purchased a home. If they purchased a home only within the last 6 to 12 months, and if that cause for refinancing is they really need funds to catch up on some of debt, some of credit cards, car loans, lines of credit. Possibly one of the breadwinners lost a job, got laid off, and they're relying on taking equity out to pay off some of the debt. Then they might be in a pretty stressful situation, because they might not be able to obtain refinancing. It's possibly quite likely. Firstly, home prices have dropped down in the last 6 months, and when you're asking a lender to offer you refinancing to pull some of the equity, the lender will hire an appraiser to appraise the home. If the value is lower than what you initially paid, well, then there's an issue. There might not be equity to draw from. Then secondly, the rates have gone up. If somebody purchased 12 months ago, today rates are higher to begin with, just the simple rate that the lender is giving, and then quantify that with stress test, where you have to get approved at a 2% higher rate than what the lender is actually giving you. It's going to be very, very hard to obtain financing in certain situations.
Right.
And those folks might be in a situation where they might have to sell, or they might have to look at private lending, which in itself
is a stress on its own, because the interest rate on private lending could be much higher. Yeah. So, and this is exactly why I wanted to kind of just chat about it, is to, if people are finding themselves in this situation because maybe, they've been injured at work or had a car accident, those folks may be getting supplemented income from their insurance, but it's not what they were making before. And if there's some other issues, and then with this coming up, they need to be aware that this could be a potential source of stress for them, right?
Absolutely. It would be very, very prudent, very wise for folks to talk to their mortgage brokers, their financial advisors, their financial planners, possibly accountants, just to recap where they're at, and would there be any need for extra funding for them going forward. If that is the case, they should really explore that option now, sooner rather than later, before January 1st. Either way, it would be very prudent for them to educate themselves.
So you're saying, before this stress test comes in, there might be something that people could do if they are in that situation where they might need to refinance. Now would be the time to start kind of thinking about it compared to January 1st?
Absolutely.
Okay.
We get calls daily now with folks, not about refinancing. They will be calling their mortgage agents regarding that, but either buying or selling. So some want to get ahead of the market, even though they realize that prices will come down after January 1st. Their purchasing power is going to come down more than that. Their purchasing power is most likely come down around 20%. It's highly unlikely that the prices of homes will come down 20%. So to take advantage of their purchasing power now, they're looking to purchase now. Same as some folks who have been thinking about selling in the spring or early spring. Well, they're now exploring the option of selling now because, again, buying power is higher, and in the short term, values of homes will get pushed down. So they're trying to get a jump on that as well.
Right.
Even though historically this is not a time of the year when you normally go into the market.
Right.
We're getting closer to holidays, but these are not typical. This is not typical situation.
Right. No, maybe in the past, like, have we had, okay, I know you were mentioning there was a stress test implemented in 2008. Like, do these stress tests stay active for a period of time, or is this just kind of a short-term way of keeping the market cool, or?
So we got a stress test implemented last year, which mostly affected first-time home buyers. There is a stress test already in place, which affects anybody who is putting a down payment less than 20%.
Right.
Generally, that's affecting first-time home buyers. So they need to obtain mortgage insurance, and B, they need to get stress tested at a Bank of Canada rate, not at the rate that the lender is actually offering them. Bottom line, all of these legislations are government-driven legislations. So
whether they stay or go,
most likely they're going to stay, but at the same time, you never know what's going to happen, how the economy is going to react, and who's in power.
Oh, well, yeah, that's right. Okay.
So
because it's government and it's political,
can change,
so anything
and only time will tell.
Yeah, but the fact and the reality is that January 1st, this next stress test is coming. Is it now going to affect as well? First, like somebody who's thinking about buying a home, or are they just kind of to the previous? So they're subject to the previous stress test. Does this one affect them too, or?
This is going to affect actually the rest. It's gonna, in a short run, it's really penalizing established buyers, really folks with a lot of equity, maybe somebody who's moving from a nice home to their dream home. Again, it doesn't matter whether folks have 5% down payment or 35%. So it's going to affect absolutely everybody.
Right.
Everybody, and their buying power comes down. First-time home buyers, they already had to go through that. That being said, according to this stress test, well, the testing is going to be even higher due to fees. The interest rates.
Yeah. Okay.
Going up.
Gotcha. So what are the solutions for people? I mean, the solution is talk now and try to not get subjected to the stress test in January, like
Education, absolutely. Same as many things in life. Finding out where you're at. Usually, ideally, is talking to a combination of people, talking to your mortgage agent, figuring out what your buying power, buying capability is, talking to your financial planner to, if you're not there, if you're not capable, to put a plan in place.
Right.
Financial planner might need to be in contact with the accountant, and of course, talking to your real estate agent as well. to basically see what are the options out there, what are the possibilities, depending what situation you're in.
Right.
In the busy hopping market, when prices were going up essentially weekly and not monthly, everybody wanted to be in real estate because there was so much money changing hands. We are now in a more balanced market. We're definitely in a balanced market. Market is good. According to October stats for Toronto Real Estate Board, we have 2.6 months of inventory. That is the one most significant stat that defines real estate market. That is less inventory than Vancouver, who recuperated completely from the foreign buyers tax. Their inventory is at 3 months. So, which means, just to define that.
Yeah, I'm like, what does that mean?
What does that mean?
Yeah.
So how you calculate months of time of inventory? Months of inventory is you take a number of listings that are sold. For example, in October of this year, 2017, there was something just over 7,100 of listings that sold. While we have in October over 18,000 listings available, active.
Right.
So you divide 18,000 with 7,100 and you get to 2.6 months of inventory, which is actually still seller's market. It's more balanced. Back in March, we had something down to 0.65 months of inventory, which means that it's 2.5 weeks of inventory. That means if listings would stop coming to the market, it would take 2.5 weeks to sell all of the listings in the marketplace, and we're now at 2.6 months.
Okay, so a little stretched out.
Absolutely.
Okay.
And
so it's just not moving as fast as it was moving before.
Well, the days on the market is longer as well, but it talks about the actual inventory in the marketplace. For the market to really turn, to be depressed, you're looking at something over 6 months and over of inventory, where there's so many listings in the marketplace that if listings would stop, you turn off the faucet and no more listings, it would take 6 months to sell them all. Then you're starting to talk about a depressed market, buyer's market. We're very, very far from that. It's a good market to be a buyer and a seller. It's fair market in the sense of you don't have to go through bidding wars. I mean, those bidding wars were really not a good situation for everybody. I don't think that anybody ever woke up in the morning and said, "Oh,
I want to pay more.
I can't wait to go into a bidding war."
Yeah.
Including realtors as well.
Right.
Because
it's hard.
You have 8-9 offers, only one can win.
Right.
Only one happy party and many unhappy parties at the end of the evening.
Yeah, and a lot of families not kind of getting the homes that they want, and of course budgets,
and then stretching themselves, overpaying, and putting themselves in an uncomfortable financial situation.
Absolutely.
So from that aspect, we are in a good market.
Okay, so that's good news. But just for people to be aware that, if you're having some more financial struggles or your situation has changed where, your income is not quite as high as it was, then this might be something you really want to sit down and take a look at before
Absolutely.
January 1st. Whereas for other people who might be more solidified, maybe like people who are investors who kind of have several properties, they might sort of be like, still okay if they were looking to invest. Like, it's still a good time for people to invest if they're in a sort of stable position.
I live in real estate, so for myself, real estate is the best investment to have. It's a preferred option versus stocks, bonds, mutual funds. Historically, it keeps on going up, and with the area we live in here, specifically GTA, which possibly single best area in the world and most appealing area for immigrants to come to, in the long run prices will keep on going up. So it's a very prudent investment.
Right.
And I would suggest and nudge everybody to look at that option given the opportunity, because it's a secure option. It's gives you 3 potential sources of income, depending on the property.
Yeah.
Which you don't tend to see everywhere in everything. If you obtain an investment property, you have a potential to have positive cash flow, depending on what the property is, where it is, and what the rental income is. So that's one avenue of revenue. Secondly, you are paying off your principal mortgage, and creating more equity in the property. And third, the sheer appreciation, and that's actually where the biggest gains are usually obtained.
Yeah. What is the rental market like? Just for people who might be thinking, you know what, I don't know, maybe I need to sell my home, I need to rent. How is rental pricings and rental properties like availability? I don't even know if you have an answer to that, but it just kind of popped in my head.
Well, there are rentals available, there are leases available more or less everywhere, but the rental market really has boomed since April, and we expect by boomed in prices, rental prices going up, and I think we can expect another boom starting January 1st because of this stress test.
Right.
So back in April, province of Ontario brought in the Ontario Housing Plan. One of the key points of that housing plan was rent control.
Yeah.
Rent control, which already existed for properties who were older, built prior to 1991, but then it got introduced for all the properties across the board. And what rent control means is that landlord can only increase the rent according to the annual guideline by the Landlord and Tenant Board, which for this year it's 2.5%, and next year I believe it might be 1.5%. So what happens is if you obtain a tenant, and if this is a long-term tenant that wants to stay there for a number of years, already a couple of years down the road, the rent that tenant is paying is below market value, and the return on investment is maybe not as good as the landlord would like.
Yes.
So what happens when a tenant at a property leaves, that is landlord's only opportunity to really catch up with the market value. So since April, what we started seeing is a big bump, constant bump in rents, because as properties would become available, come to market, landlords would increase the asking rent, simply because that is their opportunity to increase the rent and have a better return on their investment. Mm-hmm. Now, with the stress test, there's going to be more and more people who will be pushed into rental market, who will not be able to obtain that first mortgage, and they will depend on the rental market. So you will have similar number of rentals available, but you will have greater pool of tenants.
Right.
So it's supply and demand.
Right.
It's very easy to predict that rents will continue to go up and to rise, so, which makes investment properties even more appealing.
Right.
Now, if you are looking, depends on your financial strength, but if you're looking at something that's a duplex or a triplex or a fourplex, you are still looking at a residential rate. But the moment you step into larger multi-residential properties, 6 units or more, well, then you're not looking at a residential mortgage anymore. You're looking at a commercial mortgage, and commercial mortgages are not affected by stress test.
Oh, okay.
So it
would be good to know.
Might be an excellent opportunity for some folks out there. Myself, my partners and myself, we have just obtained a small building in St. Catharines with that in mind. Seeing the rental market shifting. Rents going up and expecting rents to be pushed up even more with these changes. So we see it as an opportunity for a solid investment going forward.
Absolutely. So I thought maybe just to kind of round our conversation off, is there anything that, like, if you had to give somebody any kind of advice, what to do, like, or is there anything that you would want to tell the audience with respect to this upcoming stress test that we haven't really mentioned? I know you were saying like go and, speak with your financial planners, your mortgage brokers, your real estate, see what your options are. But anything else that you think would be important for people to know that we haven't sort of mentioned regarding the stress test?
I can't stress enough how important it is to depend on people you trust versus what you hear on TV, what you hear on the radio, on your morning drive, what you read in the papers. A lot of stuff out in the media is written in a way to simply draw people in. Reality is not always the same as what we hear out there. So I really cannot stress enough talking to people you consider your trusted advisors.
Yeah.
So again, same folks: your realtor, your mortgage agent, your accountant, your financial planner. Those are the people whose advice you really need to lean on, and get the right input and correct
information.
Accurate.
Yeah,
Absolutely.
Because of course the news is going to be a lot more negative, and it's going to be sort of made a little more extravagant to get the viewership, which can put people sort of in a panic when there's not really a need for it, or might underplay the situation. So if some of this information has you sort of thinking then about whether or not you should get advice, maybe just get the advice so that you're not in stress. And we all know that stress is not good for your health, and we know that financial stress is a big stressor in life. And as we already mentioned, your house is your shelter, it's your sense of security, so you want to make sure that you're in a good position. So as I mentioned, we're going to have Jack's contact info at the end of the slide, so if you have some more questions, I'm sure he'd be more than happy to assist and help you through, answer any questions, or get you connected to the right people that might be able to advise you correctly. So thank you so much for coming on the show, and I hope this was a good opportunity for you to share your knowledge, and hopefully a great opportunity for the audience to be educated about.
Absolutely. Thank you kindly for having me. I love talking about this. Hopefully giving somebody some value, something of value, hopefully prompting someone out there to go and talk to people, and hopefully not get themselves in any financial difficulties, financial trouble. Try to avoid it, and plan for a safer and stressless future.
Absolutely. Well, thank you. And thanks everybody. See you next time.
Cheers.